let's understand what good debt and bad debt is, right? Bad debt is a debt that you take either to go on holiday, to buy for someone a gift, right? Or to buy expensive trainers that's not used for work, or basically to buy cars just to show off, or buying TVs, sofas, etc., etc., that doesn't bring you income. For example, if you pay for a holiday, once you've gone to the holiday, you've gone back, there's nothing, you've got to pay that debt. If you buy a gift for someone by taking a debt, again, that's another trouble. So these are the sort of thing that we call bad debt. In a contrast, what is a good debt? A good debt is any debt you take that you invest that gives you residual income. Let's take this into perspective, okay? Or basically, a good debt is any debt you've taken to educate yourself, to be able to utilize what you've educated on to make you or generate you income, mainly passive income. This is what we call a good debt. And again, let's just go into it slightly so you know what that good debt is. Say for example, you paid for a property course. Maybe you jump on my property investment crash courses, or maybe you've jumped onto my mentorship program. You educate yourself to start investing in properties or to learn how to invest in properties. So that sort of investment, it's a good investment because basically doing that course or going through that mentorship program to allow you or to expedite your process to start buying or acquiring investment properties, which will generate you handsome return on investment. Alternatively, you could take a debt to maybe buy a property, right, or to lease a property that will bring you cash flow. You can borrow money from the bank. Suppose you want to buy £100,000 property, you'll put down £25,000 and the bank will lend you £75,000, which is 75% of buying that house. You put that money in to buy that house. So once you've bought that house, you'll be renting that house to a tenant. So what happens then? The tenant pays for the debt. The tenant pays you the rent. You deduct your interest for that loan for the £75,000, and any of the expenses, whatever is left over, will be your profit. That's what we call net profit or cash flow. So basically, that debt is a good debt because it's bringing you rental income, less all your expenses, and generating you handsome profit in your debt. Again, for a straight buy-to-let property, that could be anywhere from £250 to about £300 or £400. And again, that sort of debt is a good debt. Or getting a debt to actually acquire a rent-to-rent property or rent-to-service accommodation property. And again, I won't go in defining what these strategies are. But again, these are strategies that allow you to make anywhere from £400 to about £2,000 a calendar month. So again, these sort of debts are good debts because they're bringing you residual income. They're making you money. Right, it's not like the debt that you incur for your wedding or save for going to a party, etc., etc. So this sort of debt are bad debt. In contrast, these are debts that will bring you money. Suppose you invest in rent to rent. So basically, these are the two different. So why investors are using limited company to invest or buy properties instead of their names? The number one advantage, basically, more mortgage tax relief is available to you if you buy a property in a company name. Let me explain how. As a landlord or property investor, you know exactly what that means. The government introduced a law in 2020, which means that landlords are no longer able to deduct interest as an expense in their rental income. So basically, if you are renting your property under your own name, right, before 2020, you were able to use interest as a tax deductible expense. So from 2020, I think the government did a scale and waived it up. I finished that scale off, I think, by 2021. Basically, so since then, you're not allowed to fully deduct the interest payment you make for your mortgage as an expense. So what that means, basically, you get to be taxed more in your net profit. So the government taxed you more for the profit you make in your property investment. And obviously this only kind of impacts people that are over the 20% income tax bracket normally impact people that are on 40 to 45% plus interest rate bracket. If you are still earning, if you're still on 20%, it may not impact you straight away. But obviously, if you're thinking about the future, it may impact you. Okay, because obviously you will not be able to deduct interest as an expense in your property. However, if you buy the property in a limited company, basically that interest becomes a tax deductible interest. So meaning you can include that as a cost. If you buy the property under a company name, you'll be able to deduct the interest, you can be able to deduct all the repairs and maintenance. So many advantages if you were to buy a property under a company name. Again, as I said, this depends on your income and then obviously your tax bracket. But if you're looking to increase your income by investing in more properties, so probably I would suggest maybe you consider buying properties in a limited company, because obviously then you'll be able to deduct that expense there as an expense. If you buy a property under a company name, you can save thousands of pounds when paying corporation tax. Perhaps the biggest reason investors choose to form a limited company is the income taxed in a company property. The current corporation tax is currently 19%, and then obviously the government is estimating to increase that by 2023 to 25%, whereas your income tax threshold is basically ranges between 20 to 45%. So again, if you're in that bracket, obviously, if you buy the property in that bracket and you buy it under your name, you get hit by a massive income tax bill. So whereas if you buy it under a company name, you will deduct the interest, you can deduct your travel costs, you can deduct the meetings you have with your investors or with your builders. You can deduct so many stuff from it, and then obviously at the net on the net profit you would only have to pay 19% as well. So if you're looking at 2023, that would be about 25%. So I'm hoping that due to the current economic climate, the government may consider keeping it at 19% or maybe just stick to maybe 22 or 23% instead of 25%. Again, it's still way better than being charged 45%. So again, that's another benefit you get from actually having your property under a company name. You can deduct your interest, you can deduct so many expenses, obviously have to be legal expenses, and then you pay tax on whatever is remaining. Again, this is what they call you pay yourself first. So whatever expenses you actually do, you deduct that before the taxman pays anything. Whereas if you're a landlord, then obviously you pay the taxman for the interest rate instead of actually deducting all your costs. Okay? What causes recession firstly is because where there is a standstill or production in an economy or the world economy is kind of stagnating, right? There are more demand than supply, and there are lots of people kind of wanting the same thing, and there's less of that thing, which is inflation basically. And then obviously people are not manufacturing, manufacturers are not manufacturing, prices are going up significantly. And people obviously are not having higher salaries. Their salary has remained the same for about 5-6 years. It hasn't changed drastically, and then prices are increasing and increasing and increases, and companies cannot afford to actually pay you because it costs them more to provide the services or products that they're selling out there. And then obviously once that demand hit that pinnacle stage, guess what? People would then not afford to pay, and guess what? The company would have lots of stock, they won't be able to sell it, and then guess what? That then becomes a recession, right? And then this price increases drastically, then causes people to be fearful even to go out for a meal, become fearful to buy product and services. That's the fear. Is the fear. If the fear becomes imminent or if the fear becomes sudden, that then stop the economy from working, right? It stops everybody, because if you used to go to a restaurant once a week, then you stop that restaurant has lost the business. If you used to go a couple of times or so and you've stopped one and you start going once again, that business has lost that money. If you used to do shopping every month and you stop that business is been basically you've made them lost money that way. So these are the signs of recession. Number one, price increase. Number 2, more demand, less supply. Number 3, obviously the war in Ukraine. And then number 4, obviously, people are worried about what the interest rate or what's happening within the economy. Buying one property that will generate you 15 to 40,000 pounds net profit. That is just unbelievable. That would expedite your investment process and it will take you to the next level. So are you really going to watch this opportunity pass by without taking any action? Are you really going to do that? I hope you won't be that person that will just sit back and wait for this storm to go away and you become the victim. You drown alone. You literally drown in this wave. You don't want to be that person. Are you really going to sit down or sit back and relax, wait for your company to be able to get you to where you want to go? I hope not. So take your financial situation into your responsibility, right? Take the action now. Are you going to educate yourself? Are you going to start finding joint venture partners? Are you going to start networking? Are you going to start saving that money? I know it might be short time now, but whatever money you could save it right now to get you prepared for when recession hits, because it's coming, it's on its way. We've got all the signs, basically. We've got all the signs and it's coming. But I warn you now, don't let that storm, don't be a victim of that storm. Be a victor, right? Be someone who succeeds during these difficult times. Someone who made a massive return on their investment during these difficult times. And again, I really hope this has bring home an idea or ways to start investing in properties. Again, if you like this video or any of my videos, don't forget to hit the like button below. Subscribe for my channel for more of these amazing tutorials. I look forward to sharing the next video.